What's up, guys? Logan here again. I'm joined by Maserati or Maz. You guys know him from the MazSpreads videos that have been doing really well, and I know you guys have adopted a lot of his strategies. So we're having him back on again to answer some of your guys' questions by showing some individual stocks this time too, and showing the charts. So I'm really excited to have you back on, man. So how you been doing today?
Hey Logan, how's it going, man? I'm doing good. I'm up in Northeast. We got some snow on the way, so we're trying to stay warm and all. But yeah, we're doing good. All these guys have been hopping on your hopping on your videos, so I definitely am happy to be back. I haven't gone anywhere. I've just been active in the Discord. But yeah, we've been there've been some weeks I have been trading, some weeks I haven't been trading. This week I was not in the market. This week I expected there to be some volatility from the testimonials on the Robinhood situation, so I stayed out. And you know that had the SPY is down, and the SPY would have been my main play. I mean, I probably still would have been safe, but you know, it's just always good to sometimes be cash, sometimes, and just to stay on the sidelines. So why not make a video today showing you guys exactly how I go about setting up the trades, looking at what variables they look at. And then we're going to go, we'll look at ETFs, and then I'll show you guys how to do these on some pretty popular stocks. You know, you can do safe credit spreads. I like to call them high probability safe on names like Tesla, on names like Amazon, on names like Google. And I'll show you guys how to do that. So that's what I'm thinking for this. Where do you want to start, Logan?
I think that's fantastic. I mean, we could start. I know Tesla's a really popular one, and I personally love playing Google myself. I adopted that a couple weeks ago. I was messing with it, just grabbing. I only was giving myself, like the 88% probability out of the money and testing it around earnings time, because I know that there's always that bullish movement before earnings most of the time. So I was kind of playing that run up and did pretty well with it. Was able to gain, I think, like 40% on a good bullish day. So it was a really, really cool strategy, and I really like Google. I like the individual stocks, the ones that are the big movers like Tesla, that like Amazon. I've had an Amazon spread before, and that was when I closed at break even because I played it into earnings, and the day after it sold off like crazy. So we can hop in whatever one you want to chat about first. Like, I'm totally cool with.
I think Tesla sounds good. So yeah, we'll see what our boy Papa Elon's up to these days with Tesla.
Papa Elon.
Now, full disclaimer: I traded Tesla last week and was profitable on the position. This week, obviously, I'm not trading, and also this is obviously a paper account. If you guys seasoned ThinkorSwim users will realize that the paper account moves about 100 times faster than a real-time account when doing videos like this. So that's just my reasoning to use paper today. But let's go over the dynamics of Tesla right now. What you're seeing is that it was at a low. So first off, this is one of my how I go about my spreads. This is going to be a 3-year weekly chart. So all these candles is showing the movement of Tesla in a week period. What I use that for is for this information up here at the top. Now, what I'm going to do is I'm going to put my cursor on last week's candle. Now, last week's candle, which is dated 2/8/21, Tesla opened at 869. It reached a high of 877. It went to a low of 785 at an big open gap down, and it closed at 816. The difference between the high and the low in Tesla was $92.44 a share. Wow. That's incredible. I mean, the implied volatility on Tesla that week, right now, it's around 68%. Last week, the implied volatility started around 70, and at one point it was up to 110, and now it calmed back down. But what I do here is I use this charting. I don't draw support and resistance lines. I don't draw technical wedges or anything of that matter. I'm looking at simply 3 numbers. I'm looking at the O, which stands for open, and this is, again, what I do is I'm trading in the week dated. So this was last Friday. So if I was looking at Tesla and I wanted to trade it this week on Monday, I would have looked at this chart prior to open, because this data is historical data at that point. It's not going to change.
Mm-hmm.
So I'm writing down in a journal when I do trading, it's a business. I want to have a routine. I want to make sure that I'm tracking information, just like how you track your personal finances. You should track your account.
Mm-hmm.
I'm always tracking what these stocks are doing, because I can then plug them into a spreadsheet, and those spreadsheets are then going to be able to show me a 1 standard deviation, a 2 standard deviation. That's important information for me. So the first thing I'm recording is that the open was at 869.67. Then I'm recording the close. The close was 816.12.
Mm-hmm.
So I record the difference of those two, which in this case, if you guys don't have a calculator with you as well, that's something I recommend that you guys get, because I always use my Texas Instrument TI-30XS. This thing is amazing. Coming from an engineering background, this thing does it all. So Tesla last week dropped 53.55, and it dropped because the candle's red on ThinkorSwim. I don't change. This is just the standard appearance, right? It's red. And then you could see the wicks, because it wicked up to at one point a high of 877 and a low of 785. So there were wicks on the side, and then the body, it closed red. So what I'm seeing immediately is that last week it moved 53.55. So that is the range that Tesla moved. The total range that Tesla moved is called your R value, or the R in the top right or top left. The R was 92.44. That's a difference between your H and your L, which is your high and your low, respectively. Mm-hmm. So what I do with individual stocks like these is I write down these numbers. So I write down the fact that it moved 53.55 from open to close over the course of 4 days, including Monday. Then I look at the total range, which was 92.44. Then I pull up, once the market opens at around 9:30, that's when I'll pull up my option chain. Now, we're not looking at April. We're going to be, in this case, we'll just look at that. We'll just do this for this example. I'm right now it's Thursday, and I would have done this on a Monday. So we'll just take these. We'll just use this weekly 8-day to expiration. Mm-hmm. So last week it moved 53.55. If you guys don't know, at the top here, I've talked about this before, but we'll just revisit it. The implied volatility for next week is 60.34%. That implied volatility with 4 days till expiration, when you do that calculus, it comes to a plus or minus range of 58.975. So that is what Tesla's expected move will be next week. I know last week that the actual range was 53.55 with a total range of 94, something like that. Mm-hmm. So what I do is I immediately subtract from the spot Tesla price on the open. I'm going to subtract this plus or minus number, and I'm going to subtract that plus or minus number, because the plus or minus 58 is greater than the plus or minus 53 of last week. So I'm already positioning myself outside of the actual range that Tesla moved last week. So I'm already safer in that aspect. I'm already going to give myself basically about $6 more dollars to the downside. Tesla is usually in $5 increments. So I'm basically going to go usually probably one strike lower than I want. But then I'm also going to be thinking that the range of Tesla on this last candle was 92.44. So then if you look at your spot price, we'll just use 784, for example, then we're talking minus 92.44. All of a sudden, the safe spot for Tesla, in my opinion, is going to be around $690. Mm-hmm. That is where I'm positioning a put credit spread. So you go to your chain. If you guys don't know, very important, strikes all. Make sure you have your bid size, your ask size, and this is the big key here. This is going to be your probability out of the money. And if you guys don't know how to customize this, just go to your layout tab, go to customize, take a picture of this right here, and then where it has add items or look up a column, you just simply type it in, and then you can just literally add items to this and hit OK. So take 5 seconds, make sure you set your chain up just like that for the best success. Biggest thing too, mark. What mark is instead of looking at your bid and ask, which moves all the freaking time. This is just going to give you a solid number that you can base how much credit you're going to receive off of your spreads. So we're talking, I said 690. Yep. That's going to be 88.68% chance probability out of money with a 3.700 mark. Now Tesla in this down here is going to be $10 increments. That's fine. What you guys know is that you need about $1,000 minus your credit received to get in on position. So, 88 is good, but you guys can still make money on Tesla, like all the way at like 600. Like, look at this. This is because Tesla's gone down. Whenever Tesla goes down, the puts are going to become more valuable. So when you time, I usually in the morning, I don't really worry about timing on ETFs because ETFs are diversified. They're going to be moving slow. On Tesla, I might pull up also like a 5-minute chart and watch the open. I'm not going to do anything until at least 10 a.m. If Tesla starts to go down between 9:30 and 10, I'm going to be watching these spreads increase in credit. And that is going to be optimal because the amount of difference between the two, 600 minus 590 is still 10. So that'd be $1,000. That number is not going to change. So I'm going to be able to get more credit for the same collateral if Tesla is moving down. So again, you just click on your bid, sell, vertical, and there you go. So, 11 cents right now, that's fine. Obviously, we can probably get a little more than that. But this is, that is what I would, if you want to be safe on Tesla and use it as an income, meaning consistency over and over and over, this is where I would be. This is going to be $11 per spread, 11 for whatever. Some people might say, oh, it's not enough. In the end, it's about compounding returns. If you can continue to do this and grow your account and continue to grow it, then then you're going to be able to go 20 wide, or then you can go 15 wide if you're in a five strike area. So, right around this area. But ultimately, the safe. This is 96% we're talking, and you could still make $11 and put up like 800 something. Yeah. I'll just tell you. $110 on. So this is again, it's 10 spreads, so it's about $989 for collateral for one spread. So that's safe. But if you guys wanted to see true, where I initially said our target was, we said 690. I'll go 685. Now, obviously, that's not 590 is gonna be too much. So then you just adjust your string here. Let's go 10 wide. 675s. Says it's not traded. Hold on here.
I was gonna say maybe try like the 690, 680.
Oh, that's why. Okay, so I'm back to 10s.
Yeah.
So we'll go. We'll be safer. We'll go 680. This is just purely again based off of a math model. Sell vertical. 680, 670. Now we're talking $47. This is going to be a $470 on about probably 9,005. Yeah, 953. So if you're talking one spread, $953 to earn 47, 470 to get 953. Last week I got 560 on around a 765, 755. Now because Tesla's moved down 2 weeks here in a row. Now I'm going to be now I'm looking around the 680 mark, and now we're talking around $470 max profit. So
that's huge.
That's a safe Tesla in my opinion. Now the great thing about this is if I'm looking at weeklies. Now I'm a weekly trader because my mentality in this ETFs is compounding returns. So I want to be in the stock in it for like 4 weeks or less. Now this is we're talking 490 right now. When I do individual stocks, I do them rarely. I do them when I need to boost an account after a loss. I did suffer a loss a couple of weeks ago, and that was fully disclaimed in the Discord. Lost about 1,500 on that on a SPY, so not a big deal. So Where's 47 here? Now, if I could do this potentially in March, we're talking 150. So 150 divided by 47, that's going to be about 3 times as much credit. So that is going to be about 1,470 for 8,530. Now that's actually going to be a better deal. So when you do a Tesla this far away, I might actually add more time to them, and then I'm going to do an approach where I'm going to let these guys just decay over and over and over, and I'm just going to watch the spot on Tesla. And after a while, if Tesla probably moves up to, again, about 830, these guys are going to be crushed, which means I'm going to be profitable. Yeah. And then I could just continue to roll them out. I could roll them up if Tesla continues to move up with that $90 range. And if that range from 90 ends up going down to like 60 in like 2 weeks, then I can roll them up and get even more credit. Now, rolling is something that I don't do on the ETFs. Rolling is going to be something I do on the individual stocks. What rolling would be, it would simply be closing. You essentially close your order for a debit, and then from that debit you reopen a new Tesla, either at the same strikes or a little higher strikes, for hopefully more credit, ideally more credit, and that way it's still a net credit position. And in this case, when you roll, you're actually going to profit. You're going to gain your collateral or gain your credit, reduce your collateral, and then they're going to take some of the credit that you just received, put that back into collateral, and potentially open up either another contract or what, depending on how much you get. So that's the mentality of a Tesla. You want to be in them far away, let them decay, and then you can continue to watch and put in a safety factor on the total range of Tesla. Reminder, the range was 92. So right now the range on this week is 58. So the range is contracting, but the stock is moving down. So that's why there's so much credit available even 3 weeks out. 1,470 on a 8.6K collateral is fantastic. So
100%.
That is the goal on Tesla. Let's walk through Amazon. It's another popular stock that's brought up in the Discord a lot. And Logan, I know you said you were touching Amazon. That is not Amazon.
Yeah,
that is.
I was messing with Amazon a lot back in November. So I was playing them a lot because you could see. I mean, they were. If we look, where would that be? Yeah, they were just kind of consolidating in that range, where they're just up and down. So I was always buying like selling the 3,000 and then buying right underneath it.
Okay.
Because I saw a lot of support around the 3,000 range. So I'd wait until they were at like 3,400 and then sell the 3,000 put and buy right underneath it.
Sure.
So that was that's how I played them for a little bit. Did a couple trades on them. Closed one of them at break even. That was after their earnings. You can see the really big red candle like towards the end of October.
Right here.
Yeah, so that was the day that I ended up closing them, because if you look closer, you can see like the candle had closed that day or got down to it but didn't close. But like right where that bottom wick is where my sell was. So I was like, I got to get out of this on break even. So I've played it a couple times.
All right, awesome. Yeah, so what I'm seeing with Amazon is 100%. It's moving sideways. That's usually best. People will say, "Oh, do an iron condor." That's one of the things that I don't really like to do, because an iron condor, the probability of touch is multiple. Is like as a multiple factor. So if I show probability out of the money, some people you could also look at the probability of touch. When I'm trading, usually about 90% out of the money, that there's still about a 10 to 12% chance that the market could touch that strike, meaning that the low on a candle could hit it, and then it could bounce back up. And that's just based off of, again, implied volatility. So I don't usually use probability of touch unless I'm making an iron condor. In this case, I haven't been making iron condors, mainly due to the VIX. The VIX has just been so volatile. Thank Reddit for that. I hope you guys made a ton of money, but you guys have made iron condor traders and some other traders just have some nightmares just based off of how fast some of these stocks are whipsawing, especially if they're in the SPY or in the S&P.
100%.
been rough, but all good. So let's do this exercise again. So last week, Amazon 3358 closed at 32.77. Pull out your handy dandy calculator. 3358.5 minus 3277.71. It's going to be 80.79. The total range of Amazon was approximately 132. Then you go to your trade tab. You delete. We're not going to take this. Delete that. All right, so we got Amazon pulled up. Look at here. So right here, the plus or minus 113,589 with an implied volatility of 27.44. So the implied volatility of Amazon is actually quite low, even with the CEO change. That's quite surprising. So again, 113 is going to be greater than 80.79. And the range of Amazon, again, on this candle was 132. So again, we're definitely going to be down 113, and we're definitely going to be subtracting 132 from here. Let's just move into the area. So look at it. What's insane about Amazon is the fact that 96. You could still make money on any of these. Now your volatility, your bid size, ask size is quite low.
Yeah.
So you might have to use a market order. But I mean, again, no one's trading these right now because they're still 8 days out.
Yeah.
So I expect the bid size has to improve. But again, like right here, like a 31.35, 31.25, that's about $40 something right there. But again, we didn't actually subtract our 132 from our spot price. So our spot price right now, 3333.97 minus 133. Again, this is why you write this stuff down in a journal so you don't have to look back all the time. 131.69. So our target price on our target short strike established is 32.02. So that's what we look at. So that's going to be right around here.
Yep.
That's 83. Now, my rule of thumb is I want to trade with a minimum of 86% out of the money. So that's going to be around the 31.75.
Yep.
So then you want to go right here. Now, this is obviously you can be more aggressive because I think the volatility is so low right now on Amazon, surprisingly. So 31.75, 31.70 for 37 credit, and we're doing 10 of them. So confirm and send. That's 370 on about 4,630. That's not bad. And then, like I said, if Amazon, it's ranging, so you feel the position safe, give yourself some time. So let's bump this up. They don't trade. Those are weekly. So let me go to a non-weekly expiration, the 19th of March, 125. So 1.25 divided by 0.37, you're getting about 3.37 times increase in your amount of credit for the same amount of collateral. So now we're talking 1,220 on the 3780. That is a fantastic credit spread. That's awesome. But again, you're going to be in the market for approximately 30-ish days. So you're waiting on Amazon. So like I said, these could shoot up in profit. And then you could potentially continue to roll them. Nice thing about credit spreads with equities and not the ETFs, if Amazon started to get down, whenever it tanks down, your credit's going to increase, which means you're going to lose. But you could always just roll out to like an April and still be able to get out of your position once Amazon goes back up. You could still get out for a break even or a small gain and not actually have to worry about your collateral being all the way tied up in April. So you could roll out to April, continue to make your position have enough beta to become profitable, and then you'll be good from there. You also, when you do that, you're going to create enough credit where you can roll down. So you can roll down the 31.75, maybe down to like a 31.50. Give yourself more room on the downside. So that's something that you can do with the stocks, not necessarily the ETFs, because when you do the ETFs, their chain is a lot more constrained than Amazon. That is something, or Amazon or a Tesla. That's something just to be wary of, you know. So I mean, this is an awesome spread. I mean, if everyone takes that, drop it. Let me know. Let us know in the comments. I love to see what your performance is on that one. That's a fantastic one.
Even if
31.75, 31.70, 19th March expiration, $1.30 credit on 3,700 collateral. Fantastic.
Yeah, that's awesome. Even if they just paper trade it and let us know.
Yeah,
if they
exactly. The best thing about, you know, simulated trading is you can understand how understand how the market and the VIX affects the spreads, and then you can realize that the spreads are composed of two individual legs with a bid and the ask. So the trade price that you get filled at is going to change, but you want both to decrease by your time of expiration to get the maximum amount of profit. So yeah, that's the big thing. And the other nice thing is the Analyze tab. Once you pull up the Analyze tab, we'll do I'll show you an example with this trade. 31.75s on the March expiration.
That would be perfect. I'm just checking Amazon on my phone right now just to watch it.
Yeah, so then you pull these down to March 19th. Now, if you guys didn't know, ThinkorSwim is just an insane software. So if you right click anywhere on the red, go down here to Analyze Trade. There you go. So this is what a credit spread looks like. A credit spread is going to have a defined upside and a defined risk. And this blue curve is what it is today. So right now, if you were to take this trade on, Amazon is currently priced at, let me lock these. If you guys didn't know, price slices, if you unlock one, it's going to reflect the current price of Amazon. So the current price of Amazon's right here. So if we took that trade today, it'd be down about $64. But as Amazon slowly creeps up, you know, it doesn't need to necessarily be all the way up here for expiration, because as time elapses, and you can simulate your time down here, as time elapses, watch that curve explode up. This is obviously assuming that Amazon goes up.
Yeah.
But you can see within a couple 2 weeks, you're going to be up about 770. So if you just wanted to take that profit and then roll it, because your max is about 1250. I would potentially roll these if you only had about like $80 or so to go. And you're going to know how much money you have to go on the position, because you're able to then look at your monitor tab and the account statement. You could see the total amount of credit that was received into the account for the position. So then you're going to know, like, all right, this position only can gain $80 more. Is my collateral worth gaining $80 more, or do I want to close and then open another one at another 3 weeks out for a credit, and that would be considered a roll to make your collateral gain more theta over time. And that, again, when you roll, you're closing for a small debit, so you're not getting maximum profit, but you are gaining profit on the position.
Yep, because you're taking on that credit right away
so
when you roll.
Analyze tab is a great tool. You know, it also, if you find yourself doing some other crazy trades like calendar spreads or whatnot, it becomes a must to look at.
Yeah.
And we'll be talking about calendar spreads soon.
Yep.
That's another video that Logan and I will definitely be doing. So, this is a great tool, the Analyze tab. A lot of people say I haven't been using it enough. Now I have been using it. But again, I don't use them on ETFs because I don't roll the ETFs. On the ETFs, I'm in for 4 days, high probability. On these stocks, I'm realizing that if I go out longer, potentially 20 or so days to expiration, I can get 3 times more credit for the same amount of collateral. That's a genius move. That's a high probability stake with even more money coming into the account. That's what you want to do. And then you just monitor the position. And if you need to roll down, you can do that, and you could still get a net credit on the position. Once Amazon pulls up or continues to just stay the same, all that theta will continue to collect. Then you can close the position for a small profit, and then you can just get out entirely, wait for Amazon to reset, and then restart your calculations. So that's exactly the mentality.
It's fantastic.
Last one, want to do Google?
Yeah, let's do Google. I like this one a lot. Google was one that I started trading about a month ago. They've had a lot of good news recently. They had fantastic earnings, and they give out really good credit, and they don't move a ton in a day, which is really nice. Now that gap up was their earnings week where they announced that they like killed their revenue goals.
Yes, they destroyed their they got 22.3 EPS compared to 15,906. Yeah, they killed it. That was a monster earning day. So yeah, I mean, you could when you do these trades, I might not exactly trade. I might not roll to a week of earnings. I might roll to the week prior of earnings. So, ThinkorSwim does have an earnings calculator or earnings calendar within it, and you're going to know about earnings coming up. Like right here, this is when the next earnings would be 4/27. So that's just something to be cautious of. I wouldn't roll to an earnings week because an earnings is going to have higher implied volatility, but more likely it's going to have a much higher expected move. You could still have high implied volatility in a normal expected move, but in the case of earnings, you're going to have a much, much higher expected move.
Yeah.
So it's something to be cautious of. But if we look at the range of Google last week, we opened at 2104.91. We closed at 2104.11. Like we literally moved $1.80 with a total range of 60.46. That's very small. I'm going to type 60.46 just to save that. All right, 60.46. We go to our trade tab. Spot price 2188.69. Expected move next week of plus or minus 61.743. So 61.743 is greater than 60.46, which was a range. So we're going to subtract from our spot price of 2118.91. We're going to subtract 61.75. So we're going to be around 2057. That would be the target, Right, you see these zeros, by the way. This is a great example. You cannot trade anything that has a zero in the bid size. So right now we're constrained on Google to not trade anything around the 98 mark. That's fine. Not a problem at all. So 2057, it's going to be right around here somewhere. And that's around the 79%. So like I said, I like to trade around the 86s. 86 is nice for me. 2030. That is not what I wanted. 2030 with a sell vertical. There you go. 2030, 2025 for 35-cent credit. Not bad. And then if we roll those out, again, March 19th, we got 40 cents up. It's a weekly on this chain. So
wow, that Google return is like 7%.
Might have to go here with the there you go. So $1.45. So that was $1.45 divided by 40 at the last price. So that's a 3.625% increase in your collateral, and 1,450 on 355. So that's almost the exact same profit profile as the Amazon trade.
Yeah. Wow.
And if you look at the March 26s, March 26, the expected move by then is 154. So what that means is that you traded about 60 away, and it's saying that the implied move is about 154. So you're definitely going to want to roll that position at some point, because it either is going to move up and you're going to do great, or it could start moving against you, and then you could just roll it down, but you're still going to be able to gain credit. Depending on how much the premiums inflate. So that's something to be cautious about too. I mean, I started this on the 26th of Feb chain, roll, and then started looking at premium increases all the way down to 36 days expiration. But then you also want to look at this chain and say, all right, well, this is saying 154.355. So what that definitely is telling you is that at some point in time, you could hold this to expiration. Again, this number is only 70% or 68%. It's 68% or one standard deviation accurate. And that's just based off the distribution probability curve. So there's still going to be about a 30. There's still going to be 32% chance that it is outside of that range. So it could be in your favor or out of your favor. So, what this is telling you is that you probably aren't holding this all the way to max credit. You're definitely going to roll, and you're going to continue to roll, and you're going to continue to monitor the actual range of the stock. Now, the actual range of the stock is, again, right here on this chart. So the actual range last week, 60.46. This week, the range so far, 53.76. Very consistent. This week during an earnings, 265.57 to the upside.
Crazy.
This week, 120.58 upside. So this is really solid, just very basic information that you can use to turn into extremely high profitability setups. And this is all stuff that I track. I every week I write down what the expected move was on Monday, and then on Friday I record what at the close. I record what the actual closing price was, so I can compare the actual range to the expected range, and that's something I put in the spreadsheet, and that helps me determine the setups and analysis as well. But it's basically, when I say setup and analysis, what I just did on a calculator and whatnot, the sheet does for me. So that's just something that I have in my tool basket. But yeah, so that's, obviously Google will be a good opportunity as well. I don't have any issues with Google hanging out here with a doji up top, but we'll see what's happening. I only think Google's going to go up from here.
Yeah, I like Google a lot. It is showing a little overbought on the RSI, but I think as far as like being an actual fantastic company, they're just going to keep growing over the long term. Big tech.
Yeah.
They're fantastic. I really, their growth has just been insane, especially over the last year.
Sure.
I know that their YouTube revenue like increased a crazy amount because of the pandemic. People just staying at home watching YouTube, man. Like it's
I believe YouTube popped up 50% in revenue in a year, in 2 quarters, which is just insane.
Yeah, that was right.
That's nuts. So basically ETFs, the ETF strategy, it's all the same. You still do your 4 days of expiration, take the trade on the Monday, and you hold all the way till Friday at 5:30 p.m. for expiration. On individual stocks, make them safe, but then potentially add more time to get more credit, and then not necessarily, you could then hold longer depending on the actual ranges that the stock is performing.
Yep.
And then if you gain all that collateral quickly when the stock shoots up due to a volatility hike or something, any news event or something like that, then you're going to be able to roll the position and not have to worry about the fact that yes, where you initially put your spread is going to be less, or it's going to be inside the range of the expected range here, or the expected move that the market maker plugs in. This is a big formula, and that will also be a good video to show you guys in the future about how they come up with these numbers. It's pretty interesting how they do it.
Yeah, that would be huge too, because I know a lot of people ask, how do you pick the strikes that you pick? And I know that is like the bread and butter way of, putting you in the ballpark of finding what strikes you're gonna.
Yeah, exactly. And the quick answer on that, first thing you look at, you go to your charting. We'll just do a quick recap. You look at your open O, you look at your close C. Subtract those two, write that number down. Then look at your range, 60.46. That is for last week's trading. Then you go to your trade tab. You look at the week that you want to trade. In this case, it would have been, example for people who are probably watching this video, you're probably going to be trading the 26 Febs. So your expected range plus or minus 61.387. So you have that number compared to the open close last week, compared to the range last week. Whatever number is greater, you subtract that number from the spot price on the Monday open. Then you go down to that number on your trade tab. In this case for us, that number is around 70. Now it's going to be right around here. It was around the 2050s. that is outside of where I trade. I trade around an 86% chance to probability out of the money. So it gives you about 86% chance to win. Then I move that up. I'm looking around the 2025s or 2025s. And then, you right click, sell your vertical. And then what I'm doing with the individual stocks is I'm now looking at it. All right, what multiplier will I get if I move this position from 8 days out to potentially now it would be about 35 days out. So that'd be about a month. So 165 divided by, 0.47.
Mm-hmm.
It's about a 3.5 times multiplier. Anything greater than 3, I'm going to add more time to the position. And then I'm just going to make sure that I roll it once at least 80% of the credit has been received. So in reality, this position would go for 1,450 minus commission. And I'm going to target 1,160. That's how much I would get. Then I would roll, see what we would roll it to. And that's just because I know that on March 26th, it's about a month away,
mm-hmm.
the actual move of the stock is plus or minus 153, and I only traded plus or minus 60.
Mm-hmm.
So that is why you would roll the individual stocks or the individual equities. In the ETFs, 4 days of expiration, no roll, hold till expiration or close for a loss and then get back on track. Never get a max loss situation because you do have the stop losses on the ETFs.
Mm-hmm.
So, guys, it was an absolute pleasure to do another video for you guys. We really have some amazing traders that are joining our team. And I know Logan definitely just finished up another video, so definitely look out for that video.
Yeah.
Make sure to comment any questions that you want. I'm happy to do another QA, open QA. So let me know what questions you guys got. I'll answer those. Feel free to comment if you guys take any of these trades. Again, they're not recommendations, but feel free to paper trade them or feel free to take them on your live account, smaller size, whatever size you guys are comfortable with. Be very interested to see what your results are. I think they're very safe, so let me know. And then overall, if you guys are interested, make sure to check out our Discord and make sure to hit that thumbs up button and subscribe to Logan's channel. His channel is absolutely blowing up, and we're really excited to see the growth and all the engagement with you guys. So
yeah, we're loving it. Man, I appreciate you coming on another video, man. Seriously, every time you come on, there's always tons of great feedback, and I think that's something that's so, priceless. It's just how good we've been able to put these videos together for everybody and how much they benefited from them. So I really appreciate it, and I'm super.
I really enjoy doing it too. I mean, mentorship is something that I really enjoy, and it's definitely something I'm looking into soon about how I can be mentoring more people to trade like this.
Mm-hmm.
And maybe eventually we go out and we get the right registrations and whatnot to trade other people's money as a group, all from YouTube. And that would just be an ultimate dream. That would be something really cool to see happen.
I agree, man. That sounds fantastic. Well, I appreciate having you on, and make sure you, like Maz said, leave a like on the video, subscribe, leave a comment below. Anything, it all helps. So I appreciate it, and we will see you guys in the next video.
Sounds good, guys. Have a good one.